What is going on, traders? In this video, I will be covering the exact roadmap that I took to become a six-figure trader. I will be covering how I became consistent, how I became profitable, and the exact steps that you need to take to do the same. This roadmap will be available in the Discord server for free as well, for future reference. It doesn't matter whether you are an intermediate, almost a professional, or a beginner trader. This roadmap will be for everyone. I think everyone can find value in every single step, and every single step is just as important as the next one or the previous one. So let's actually get started. The first thing is a really important question you need to ask yourself. Ask why. Why do you want to trade? Does the reason for you going into trading resonate with your dreams, with your passions, and with your life goals? Because if your why is to become rich quickly, that's never going to happen. Trading is not a get-rich-quick scheme, just like all the gurus are trying to put out there. That's completely fake. It takes a lot of hard work, and it takes constant improvement, constant reviews, and just like any other business would. I would say there are a lot more lucrative ways to get rich quicker than with trading. So if that's the sole reason, then I do recommend you to actually just completely drop the passion. But if you're really passionate about trading itself, if you love analyzing, improving, if you love meeting yourself psychologically and so much more, then trading is definitely going to be interesting for you. So first things first, everyone needs to learn the basics. You need to know what a pip is, you need to know what a candle is, you need to know how to read candles, how to place stop losses, what software to use, and so much more. And all of that will basically be covered in the Baby Pips course, which I do recommend every single beginner takes. You'll also get familiar with some retail concepts and some silly stuff that you can probably reference to in the future. The next thing you need to do is actually manage expectations. You need to really write your goals down, evaluate whether they are realistic. You need to really ground yourself and set realistic expectations. Like if you only put in 1 hour a day in studying this, it's probably going to take you a lot longer than it will when you put 4 hours a day in this. Also, life is really short. So if you're going to put days and days back to back into trading and you just don't succeed, you also need to write down like, okay, when am I going to reevaluate things? When am I going back to step 0, or when am I going to decide to actually drop this and accept that it is not for me? It's really important, and you really need to manage those expectations, because trust me, trading is just not for everyone. But if you are consistently going forward, evaluating yourself and your mistakes, you will see that trading is actually not that difficult. It's going to become really simple, and it can actually become some sort of second nature. So really manage those expectations, ground yourself and stick to them, set goals, respect those goals, and so much more. That's really important in the first phases of starting your trading journey. Then the fourth thing you need to do is, of course, pick an asset. You need to select an asset class that really suits you. Is it going to be crypto, forex, futures, options, or indices? It doesn't matter. It can be as simple as I like gold and I'm going to trade gold. It can be as simple as I think Bitcoin is quite interesting, so you trade Bitcoin or crypto. So just pick your asset class and try to stick with it for as long as possible. Try to really master it and try to advance in that specific asset class, because every single asset class is going to have different characteristics. Especially if you are going to be using different strategies, they might work on one single asset but not on the other. So it's really important that you stick with one and master one in the first place. Then number 5, it's something we all do, but it's really important to actually do. You need to do it wrong. You need to learn how to not do it. So basically take what you learned from Baby Pips, for example, and try it out in demo, or try backtesting, whatever. Try to put your strategy or the way you think you see the market to the test. It's just like with driving. If you learn how to drive, you first think, okay, driving is easy. Then you get in the car and then you realize, damn, I cannot drive at all. I'm really bad at this. And then you are going to start to evolve towards learning. So first learn how to do it wrong. If you did it wrong and you notice that you are losing money, and not in real life, of course, on demo, I hope. So first do it wrong in demo. Then you will notice, okay, I really have some stuff to learn, and that might actually give you motivation to solve the puzzle, crack the market, whatever you want to call it. Then at point 6, you really need to try and find out who you are. And this is actually something that a lot of traders fail to do. You really need to personalize the way you are going to be trading with your characteristics, your persona, right? So are you a really impatient person? Are you going to sleep bad if you have positions open overnight? Then you might actually not be a good swing trader. But don't you have time every single day to check your phone, to look at charts? And do you just want to analyze them, get in and get out at a specific point? Perhaps swing trading might be for you. Perhaps higher time frame trading might be for you. Just set alerts and go for it. But are you a really anxious person and you want to do everything as quick as possible, then perhaps you might want to become a high frequency trader or a lower time frame trader. Everything is basically possible with this. And as soon as you found out what kind of trader you are, you need to pick a religion. And with a religion, I mean, are you going to trade basic retail concepts? And just to make something clear, every single one of us, every single one who is not trading on an institutional level is basically a retail trader. It doesn't matter if you're trading smart money, ICT, supply and demand, it doesn't matter. We are all retail traders, but there is a categorized bit of retail strategies. And trust me, they work just fine. But you need to pick a religion. You need to decide how you are going to look at the markets. It can be with trend lines. It can be that you try to catch breakouts, that you try to catch reversals, that you're going to be a support and resistance trader, a smart money concept trader, a supply and demand trader, or an ICT trader. It doesn't matter. Just go over everything, look what's available in the market, and then try to find out what really resonates with you. And trust me, there is not going to be a holy grail. There is never going to be one. Honestly, I've looked for it and it just doesn't exist. So pick something that you think, okay, this is something I could look for every single day or at the moments that you want to be trading, and try to basically match that with your persona. So basically what you decided in step 6. That's going to be really important. And then once you basically picked a religion, you're going to want to do some studying. You're going to want to look at charts really long and try to find stuff for yourself, right? So you now have a religion. Let's say it's going to be supply and demand. You're going to be looking at those supply and demand levels. You're going to mark them on the chart, see when they work, when they don't work, and try to find some patterns. You really need to study everything. So the moves that are made, you need to study the different sessions, you need to study the different weekdays, seasons, and so much more. And then we get to point 9, which is also a really important point, and that is going to be risk management. Risk management is probably the most important thing in trading, because if you're going to risk 100% of your account on every single trade and you lose it, your account is gone. And trust me, without proper risk management, you will blow accounts, you will lose accounts. So really try to avoid that. By the way, I am running an elite program in my free Discord server. And the elite program is basically for traders who are trying to reach the next level, try to become professional. And I basically packaged everything that this roadmap covers. I packed it all in a simple course. I think it currently has over 30 lessons, all really valuable and straight to the point, all really clear and simple. And my elite members are really seeing the success of it. You can check out their testimonials in the Discord server. So if you want to basically learn how to trade and you went through all the basics, then you could probably apply for my elite membership and take your trading to the next level. So with that being said, let's continue to step 10, and that is going to be building a model. So after you've studied the market, you're probably going to be seeing some things. Let's say you picked SMC. You're going to see, okay, we just tapped into an order block and we rejected that. What are the characteristics of this order block? Did it sweep liquidity? Was there a bunch of displacement? And just so much more. You're going to basically start noticing things. And if you have trouble noticing these things, there are a bunch of free courses and strategies online that you can basically adapt to and backtest and make your own. Out of the box, there will probably not be any real strategies that work straight out of the box, because most of those are going to be subjective and you need to really visualize the market in your way. So try to build your own model, but you can basically pluck some inspiration from different strategies and really try to build your own model there. Once you build a model and a strategy, so basically a model in combination with risk management and all of the other tools you need, which I, in the course, for example, I'll cover in depth, you are then going to proceed to step 11, which is going to be hindsight testing. So you're basically going to be testing your model on the charts. You're going to try and place some entries there and see if you basically get more return than losses. And if you are like around break even somewhere, even that would be really great, because then you can actually start tweaking, right? Because the hindsight testing does not mean that it's going to be your final strategy. As soon as you've done the hindsight testing, and that's basically going to be taking notes of trades, taking screenshots, journaling all of them, and you're basically going to be auditing it. So basically ask yourself, is your strategy working? Are you at least breaking even? And if you are, then you can start basically adding confluences. A confluence can be, I want it to be around 10 a.m. I want it to be around 1 p.m. It doesn't matter. A confluence can be really simple. I want it to move 5 pips, 10 pips, and just really study your data, study what you collected, and try to turn them into confluences. That's going to be really important. And trust me, it can sometimes be as simple as looking at a certain time, looking at a certain amount of pips moved or points moved. A confluence doesn't have to be that difficult. You can have a bunch of small confluences, but don't overdo it. If you're going to add way too many confluences, you're probably going to be fail to catch trades consistently, which is also pretty important because let's say you only have an opportunity once a week, and for example, you are still in bed at the time that opportunity arises, then there is no trades that week. So really audit the strategy that you are working with. As soon as you've done your auditing and you basically validated your model, it's time to backtest. So now you're going to basically test out your strategy on data from the past, right? So in TradingView with hindsight testing, for example, you will not have a bunch of data. So it's now going to be the time to actually get that data somewhere. It can be with backtesting software like FX Replay, which you will find a discount code for in the description. It can be with anything. You just need to backtest your strategy a bunch of times to actually make sure that it is working. And if it has worked in the past, then it's pretty likely that it's going to be working right now as well. So try to collect as much data on that as possible. And I would say if you are just testing the strategy to see if it works, try to test it for 100 trades and see if the results are decent. If they are continue to 500 trades to really have proper data on it, like consecutive wins, losses, and so much more. It is really only once you start collecting this data that your trading is going to be able to go to the next level. Because if you don't have confidence in your strategy and you don't have any data on it, then it's going to be really difficult for your psychological mind to trust in it and to stick with it consistently. As soon as you've backtested everything and you have a working strategy, or at least a working backtested strategy, it is time to actually take it to the live markets. Not with a live account, of course, but with a simulation account, so a demo account. You're basically going to try to trade your strategy in simulation, at least for, I would say, 3 months, and try to get some consistent results. And if you've done that, you can basically evolve to the next step. The next step is going to be journaling. So you are going to look at those simulation trades that you took, and you're going to take screenshots of them all and review them. Am I following my strategy? Is my strategy less efficient because of live market conditions? And if so, annotate them. And you're also going to have to do your daily trade review. So let's say you took 2 trades in a single day. We're going to review 2 of those trades, see if they suited your strategy, annotate them. If they didn't suit your strategy, you need to actually look and find a reason as to why you took the trade in the first place. And that's going to be mandatory in managing your emotions and your psychology, which is a really difficult part. And again, I covered that in depth in the course. But journaling is going to be a big part of that, a big part of finding yourself psychologically. If you're making the same mistakes again and again, you can actually start to find a pattern there. And then we get to step 16, which is basically going to be your first step to becoming a professional. And that's going to be to start to take on a prop firm trial challenge. And trust me, it is only going to be relevant for you. And trust me, it is going to be a big waste of time if you skip the previous 15 points, I'm sorry. If you're going to skip all of the previous 15 steps and simply move on to starting a prop firm trial challenge, pass that and go to waste your money on either a live account or prop firm challenges, you need to have a proper strategy. You need to have it backtested. You need data on it. And only when you have all that, you can actually start looking at a prop firm trial challenge. Now, a prop firm trial challenge is basically going to be a challenge on a prop firm that is going to allow you to trade in their environment for free. And what is a prop firm? A prop firm is basically a big fund that is going to be giving you challenges that you need to complete. And if you complete those challenges, you can receive funding and you can start trading with live capital from them. So first, do some free trial challenges to actually get used to their spreads and their environment in general. As soon as you've done that, we can actually move to step 17, which is going to be that difficult one that I was talking about previously, which is going to be managing your psychology. If you're going to run into losing streaks, you are going to feel that psychologically, and you're going to likely spiral out of control, because this is the first thing that actually starts to feel real. You can actually fail this and there's pressure on you. So you really need to start managing those emotions as soon as possible. And the best way to do that is every single mistake you make, you journal it, you journal why you made this mistake. So journal what the trigger was and try to find patterns in that. And you basically need to go through these prop firm trial challenges till you can complete multiple of them back to back. That's going to be the goal here. And it doesn't mean that you need to win every single one of them. If you just end up in profit, that's good as already, but at least try to win some back to back and not lose them anymore. So try to end up a bit in profit, around break even, or hit the target, because that's going to be really important if you're going to take on a live funded challenge. So for step 18, as we can see, we have the funded. So as soon as you manage your psychology a bit and your prop firm trial challenges are going better and better, it might actually be a good time to start looking at getting funded. So you can actually try to apply for challenges with prop firms and try to pass them as good as possible. Now we are going to have to bounce back to step 17, which is manage psychology again, because of course funded accounts, they cost money. So if you put your money in the line for that, it's going to feel even more real. So basically do the same things again, manage that psychology, journal your emotions, and so much more. I think it's very rare that someone actually passes a funded challenge in their first try. So do not put too much pressure on yourself. Take this step really slow, take as many as you need. And as soon as you notice that it's really not working, it's really advisable to actually move back to the trial challenges to gain that confidence again, because it's really important that throughout this whole journey, you don't lose track of your working strategy and you stick to that. And then step 19 is basically going to be professionalizing, right? So now we're going to get into the real professional stuff where you can actually start thinking about quitting your job, going full time and doing some more serious things with trading. And the first thing is going to be to build capital. So what you're going to do once you're funded is you're going to try to slowly build up some capital. And all of this is something that I did while I was still working. I didn't quit my job at this point. I became profitable and I started building some capital. And as soon as I had the capital that I wanted, I decided to actually become a full-time trader. So I basically gave up my job to focus full-time on trading. And if you have enough capital, you need to, what I mean by that is that you need to be comfortable for a few years. And at that point, you can start thinking like, okay, it seems like this is really working out for me. At this point, I might want to quit my job and pursue this full time because this might actually be more financially beneficial for me to look at trading than to actually continue my office job or whatever you're doing at the time. For step 21, we're actually going to be looking at private equity. So as soon as you have some capital, you can obviously look at diversifying your capital, real estate, investments, stocks, so much more. You can look at all of those things, but it's also really nice to actually start building up something for yourself, because keep in mind with these funded accounts, you're always paying commissions. You're always also giving a percentage of your gains away to the prop firm. So it might be advisable to start thinking about building up some private equity. So set some money aside to actually be trading with life. And just for the record, all of this is not financial advice. This is just for educational purposes, just a disclaimer there. But building private equity can be something really lucrative. And then step 22 is going to be to improve, because now at this point you're trading with private equity, you are full-time, so you have quite a bit of time on your hands. So it's going to be time to actually start improving your skills. So really go ham there, try to create the sharpest edge possible, all while still trading your original strategy. But it might actually be really lucrative to continuously improve that strategy. Make sure to adapt it to the current market conditions, review it constantly, really treat this whole thing like a business, because at this point, this is what's going to be sustaining you, right? Step 23 is a really funny one. It's just going to be to enjoy life, right? Life is short, enjoy it. You have all this freedom. You're not locked to an office job. Take some day offs every now and then and just enjoy life, you know? And then step 24, it says 12 here, but of course this needs to be 24. Step 24 is going to be to enjoy the freedom, because now you've truly achieved a level of freedom that a lot of people are only going to be able to dream of. You worked hard for this and it is well deserved. So that's something to really enjoy. Now again, thank you so much for sticking through this video. Like I mentioned, I have an elite membership where I basically follow up serious traders really closely. You will be able to look into the trades I take. You will have a full course that will basically form you into a professional trader. Every single step you need to take, I basically cover all the points here that I talked about in the roadmap. So if that's something you're interested in, feel free to join. You can join the Discord for free and find a lot of value there. A lot of really, really nice members, really successful traders as well. We have funded traders, we have full-time traders, we have everyone. I am sure you can learn a lot even in the free part of the Discord. So feel free to join that. The links for that will be in the description. And other than that, I wish you a lot of luck on your trading journey. If I can help you in any way, feel free to hit me up in the Discord server and we'll have a chat. Well guys, talk to you later. Bye-bye.